There's a new ETF coming to the market with a big name. An ETF just launched this week, and it's being sub-advised by Doubleline, Jeffrey Goodlock's firm. Here to discuss its unique start is James Seyffart of Bloomberg Intelligence. James, so much for joining us, as you do many Fridays. And just how unique is the launch of this ETF?
Yeah, so this launch is unique in three different ways. The first way it's unique is that it's not really a true launch. It's more a strategy change and a sub-advisor change. So Doubleline is coming on to sub-advise and manage the investments of this fund. The second thing is this is a value ETF. And usually when you see new ETFs launching, new strategies launching, they launch after some good back test or some where the performance or strategy is done well, and oftentimes it underperforms going forward. In this case, value, as many people know, has underperformed a lot of the other factor ETFs, such as growth. And the third way is Doubleline is launching this, and they do sub-advise on other ETFs, primarily with State Street, and they're all active fixed income. This is their first equity version, equity ETF.
So what is your takeaway in terms of Doubleline getting into this equity ETF? It's sort of interesting, right?
Yeah, it is interesting, as we said, and then also we like to look at this and compare it against a bunch of other value ETFs. So we have a table talking about this, but there's a lot of ETFs with value in the name, and what you really learn here is that you need to understand what you're investing in and do your due diligence into the exposure that you're getting with these ETFs. So what we find is there's two realms, right? There's two ends of the spectrum. The one is the watered down version where you're getting a lot of beta exposure. The other one is the more academic version where you're trying to get as close to the academic factor of value. This one, DBLV, kind of sits in the middle. It's closer to the academic version, but it's not quite at the far end where you're getting a lot of beta exposure. It also differs in the way that its sectors are exposed. So its highest sector is financials, whereas some of the more quantitative academic factors, their highest sector is going to be consumer discretionary, mall stocks, really.
Well, bringing it back to growth and value, as you were talking about, growth over the last decade or so has really outperformed. In fact, we have a great terminal chart showing that this has been the case. But are we at an inflection point, and perhaps also with Jeffrey Goodlock getting in on this value ETF, that maybe value is going to about to have its shot?
Yeah, I mean, so our counterparts in the equity strategy team within Bloomberg Intelligence have been talking about this spread for many months at this point, and there's a lot of people talking about a reversal to the mean where value is going to outperform growth. We're not quite at the level we were during the dot-com bubble, but we are pretty elevated. It's been a 10-year run where growth has outperformed value, and I guess now is a time where Doubleline actually believes that this trend is going to reverse, and that's why this ETF is launching.
Are there other ETFs to play this spread between growth and value?
So the most common way to play this idea might be like to go long a growth or short a growth and long a value ETF, but actually Direction filed recently for ETFs with the SEC where they're going to go play this spread where it'll be 150% long the growth or value and 50% short the opposite. So you can actually, in the future, potentially bet on an ETF and straight up bet on this spread.